club has always been a forum for public figures, thought leaders, and decision makers to share their ideas. Here, we offer access to dynamic political, business, and public personalities.
We are dedicated to encouraging debate on the issues that matter to this city, this province, and this country.
The Canadian Club is one of the most important podiums anywhere in the world that a Canadian can speak to, tell Canadians what it is that they think, develop those thoughts. And so I want to thank you for that very, very much.
Please join me in thanking our esteemed panelists today.
Through our programs and events, including our youth and young leaders programs, our diversity partnerships, our joint events, and our media and social media opportunities, we offer you access to dynamic political, social, and business figures from abroad and right here at home.
The platform from which the eloquence of Canada has flowed all of that time, whether it be business, education, politics, sports, arts, and culture. If someone wants to say something to Canadians about this country and about the future of this country, this is the venue you choose.
Good morning, good afternoon, good evening, everyone, wherever you are joining us across this great country or around the world. One of the virtues of a virtual gathering is that we can bring an audience together no matter where you are, as long as you have an internet connection. And we're so glad that you took the time to join us today. My name is Bruce Sellery. I am the host, the panel moderator, and also a past president of the Canadian Club of Toronto. I would like to begin by acknowledging the Indigenous peoples of all the lands that we are on today, across this country and around the world, as I have said. While we're meeting on a virtual platform, I want to take a moment to acknowledge the importance of the land which we call home. We do this for two reasons: to reaffirm our commitment and our responsibility in improving relationships between nations to improve our own understanding of local Indigenous peoples and their cultures. We are grateful for the opportunity to be able to come together to learn on this land today. I am honored, I am thrilled to be hosting the 45th annual Outlook for the Canadian Club. It is quite well established. It is, we think, the best, certainly the longest running, but the best politically economic forecast event in this country. And we, again, this year, continue our partnership with the National Post to offer an event that asks our assembled experts to talk about the future, to make some predictions, to provide some insight on the year ahead. This is truly one of our most popular events and one of our favorite traditions. Before we get to the conversation with our panel, a couple of housekeeping items. First off, if you are noticing that your stream's a little wonky, there's a little button that says click here to switch stream. This will help if your internet is slow. There is also a questions tab, and we really encourage you to provide your questions. I'll then lob them out at the panelists and see what happens from there. If you need some technical help, there is a request help button located in the bottom right-hand corner of the page, and that is for technical support. I want to take a quick moment to thank the sponsors for today's event: Canadian Bankers Association, EY, and Scotiabank. Now, here's the thing. Canadian Club is a nonprofit. We have been gathering people for 125 years, and it is thanks in large part to our sponsors that we are able to do that. So a thank you to our sponsors, to our partners, to our members for your continued support. Our panelists today are Kevin Carmichael, who has a new job. Congratulations, Kevin, editor-in-chief at the Financial Post. Matt Gurney is a columnist with the National Post. Jean-François Perrault is senior vice president and chief economist at Scotiabank. Amanda Lang is an anchor at BNN Bloomberg. And Juliette John is a portfolio manager at Iris Asset Management. Now, I want to welcome our partner, National Post, to offer some remarks to set the tone for today, and as well to announce the winner of last year's prediction question. So every year we ask a prediction question. There is a winner. And so please join me in welcoming Marianne Lavallee, Executive Vice President, COO, and Interim Chief Financial Officer at Post Media. Marianne, over to you.
Hello, everyone. Welcome and Happy New Year from Post Media and the National Post. And thanks to everyone for joining us from across Canada and across the globe. As we gather virtually again, we all share the uncertainty of what and when we'll be at a new normal. I don't think any of us here today from business and industry, finance and not-for-profit, public and private sectors could have imagined that nearly 2 years into a pandemic, we'd still be facing the challenge of defining a new normal or not knowing how the latest twist might turn. At Post Media, our journalists continue to cover probably the biggest and longest breaking news story of our time, while keeping Canadians in the know as the appetite for trusted information and perspectives continues to grow. And just in the past year, we have launched 5 business-focused Financial Post newsletters in key areas, including investing, energy, and economy, and insightful series that delve deeper into topics like Crypto Decoded and capitalism. Like probably every business across Canada, we have had to work with clients and partners in new ways while remaining flexible and adapting along the way. And our teams have discovered innovative ways to collaborate and deliver for our audiences, our clients, partners, and each other. Maybe we're getting a bit better, all of us, at working through the unpredictable change. And 2 years into it, perhaps we can feel more confident about our outlook. I look forward to hearing more about that from today's speakers. And now, to continue our annual tradition, I'd like to share the winner from last year's forecast question. Last year, we invited you to predict the closing price for one share of Tesla for 2021. The closing price for a Tesla share was $1,056.78 US. I'm pleased to congratulate our winner, Arthur Wojcicki, who predicted the closing price of $1,049.50 US per share. And for this year's forecast question, we invite you to make your predictions on where the Dow Jones Industrial Average will be at the end of 2022. Ballots will be sent to you electronically following today's event. And now I'd like to pass things back to Bruce.
Thank you very much, Marianne. And Arthur, I really hope that in addition to winning our little contest here, you happen to invest, I don't know, 50 grand in Tesla shares. So you're really rocking it. You're really feeling the win of that pretty significant market appreciation over the last 12 months. Watch your email for a post-event outreach, and we're going to send you the details on the prediction questions so you can submit your answer to that. One other tradition that we have here at the club, whether we are virtual or we're in person, is a toast to Canada. So find your beverage if you've got one nearby, and we'll just bring it here together and raise our glass in a toast to Canada. To Canada.
Canada.
To Canada and the crazy that might unfold in this year. Now, of course, no one would have ever fathomed that we would need to be virtual again for another time. I don't know what your environment is like around you, but certainly I'm one of the many Canadians with a child downstairs being distracted by video because I'm totally ignoring them while I do this event. So many people are navigating that and the prospect of being back in online learning. I also have the benefit of having had a water heater explode in my basement on Sunday. So if you hear tapping or hammering, it's because they're installing a new water heater as we speak. And I say that partly to explain the sound that you might hear, but partly because we are all in these ridiculous circumstances. And if there is one thing that we really need to summon up for yet another month, yet another 6 months, who knows long, is the compassion for the place that people find themselves in, whatever it may be. This is number 45. This is Outlook number 45. And of course, 12 months ago, we gathered together and had a fair amount of optimism that partly that the pandemic would have run its course. Remember, there was a vaccine. You could actually fly to Dubai and get a vaccine. Now, you don't have to fly to Dubai. You don't have to lose your job. Anybody can get one. You just have to make an appointment. That is amazing. And there has been certainly good and bad news. The bad news, of course, is that the pandemic hasn't run its course. 2 years in, there are illnesses, there are deaths, there are tons of mental health challenges, not to even reference some of the impacts on the economy and the political side. But the good news is that if you are the holder of the holy trinity of privilege, you're in great shape, right? There's still all those horrendous things, but you're doing well financially. If you've kept your job, you have reduced debt, you've increased savings. If you own your own home, it has increased in value dramatically. And if you had something in an investment account with exposure to the equity markets, you have done extraordinarily well in the last 12 months. This is not a summary that I ever would have thought I would have delivered almost 2 years into a pandemic. All that being said, if you didn't have the holy trinity of job, house, and investments, things are looking pretty bleak. And with rising inflation, it is going to get tougher still for the have-nots in 2022. Now, I've introduced our guests. We're going to talk about the economy. We're going to talk about the stock market. We're going to talk about politics. But I want to set the scene here in terms of the world that we are in today. And we're going to begin with Jean-François with the state of the economy. JF, I want you to give me your summary in under 2 minutes. And I know that is a very big ask because brevity for an economist is difficult, but please do your best. How would you summarize the state of the union today as it relates to the economy?
So says the journalist.
Yeah, who just spent 25 minutes setting up the event.
That's right. Listen, I mean, it's very easy to focus on the negative things, which you've pointed out, right? We're dealing with high inflation, we're dealing with supply blockages, we're dealing with the variant, and obviously public health measures, which are all things that impede on our life, that make things a little bit difficult, that make things a little bit more challenging than obviously they should. But the thing to keep in mind is a lot of what's driving that, set aside the virus, is really the result of a global economy that's come back much more strongly than anticipated. Right. So what's going on here is really that fundamentally, growth is really, really strong, and it's posing challenges. It's creating inflation. It's making it difficult for firms to get the stuff that they need. It's making it difficult for firms to find workers. It's leading to a deterioration in, for instance, real wages. Right. So wages aren't keeping up with inflation in a lot of cases. It's leading to higher house prices. It's leading to higher interest rates. But all that, and we focus on the negative, we focus on the worrisome parts of all that, but it's important to keep in mind that really behind much of that is simply, things aren't working out way better than we thought. Going back to some of the things you said at the outset, if I'd come up with a forecast and said all those things are going to happen that you pointed out a year ago, anybody in my business would have been considered a kook, right? Like things are just working out in a way that we didn't anticipate. And a lot of that is very positive. Obviously, with a healthy side dish of challenges associated.
Yeah, Juliette, for you, you see the world through the stock picker lens. You're a bottoms-up fund manager, but you do also take into account some of these broader themes that affect the stocks that you're most interested in. How would you characterize the state of Canadian stocks today?
Well, you're absolutely right, and I would echo a lot of what Jean-François mentioned in that there have been challenges. Yet there are a lot of reasons to be extremely positive. I think we've seen the markets at all-time highs. In the US, as a perfect example, we saw 70 sequential new highs for the S&P 500, which is quite dramatic. And yet the market continues to rally. There is a significant amount of stimulus that remains in the capital markets. And even though we are at a point where we're going to see some of that stimulus be removed, and interest rates start to move higher as we move into 2022, there's still a great deal of reasons for optimism. And a lot of that has to do with healthy corporate balance sheets, the fact that companies are still enjoying a lot of opportunities for some margin expansion, even with some of the inflationary pressures that Jean-François and yourself mentioned. But there are still areas of cost cutting. There are revenue growth opportunities. And we see a lot of sections within the benchmark that haven't performed to the same extent as the Teslas that you outlined, or some of the very frothy, high growth names. And we think that there's likely to be a bit of a rotation with respect to the leadership in the benchmark compared to what we saw over the past couple of years.
All right, very helpful. Okay, Matt, let's round it out here with the three big themes that we're talking about. How would you characterize the political dynamic in Canada today?
More unstable than people realize. We have elections coming up in Ontario and Quebec. I think a lot of what we're seeing in Ontario, my home province, so the part of the country where I'm the most familiar, a lot of what we've seen in the last 24 hours, I think, has been the government trying to calculate how does it position itself for its election in June, knowing that there is an Omicron wave coming that it is not going to be able to stop. None of the public health interventions proposed yesterday to go into effect tomorrow are going to meaningfully bend the curve on this thing. It's simply too contagious. This is political positioning. I think we're seeing some of that playing out in Quebec as well. We have another minority parliament at the federal level, and I think this is actually a different minority parliament than the last one. In the last one, I think it was possible for the federal Liberals and the Prime Minister in particular to tell themselves, you know, the election was a fluke. There was the damaging revelations of the racist photos and videos of the Prime Minister right before the last election. I think they could plausibly have told themselves, you know what, we've had a good pandemic performance, we've procured the vaccines, we've had benefit payments, we're going to win this thing. In fact, again, the Prime Minister lost votes compared to his 2019 performance. So I think either he or people in his party have got to be wondering about an exit strategy, pardon me, for him. The international situation is precarious. I don't know if I'm more worried about Taiwan or Ukraine. It's hard to tell these days why I can't sleep at night. All I know is that I can't sleep at night some of the time. And the one thing I would mention is in the opening here, we've talked about some of these economic issues, housing prices, inflation. I think we need to recognize that these are not just economic issues, these are social issues as well. We have already been seeing in recent years a rise in what we can kind of generically call populism. I know that's vague, but we'll just lump a lot of stuff under that category. During the last election, I was working with my friend John Wright. He's a pollster at Mirror Public Opinion, and we were tracking among Canadian voters what we could call fringe views and signs of extreme disconnect between them and the mainstream. We're talking people who believe there is an imminent risk of civil war in this country. It's not a huge number of people, but it's growing. You take that group of disenfranchised, angry people, and then you start driving their price of housing way up. Their kids can't live in the communities they've grown up in. We take food inflation, which is going up much faster than inflation in general. These people, in many cases, have lost work due to the pandemic. These are the issues we need to be watching right now. The one last thing I would mention, exhaustion. Societally, politically, particularly with our leaders, I think we are exhausted. Everyone knows that exhaustion does not lead to good decision making. Yeah, 100%. We're going to engage in all those three realms. And of course, they're all inextricably linked in so many different ways. Kevin, I want to ask you about inflation. David Rosenberg, a bit of a contrarian, he could get mad at a cupcake. I think if there's someone, he could get mad at a cupcake. Who doesn't love a cupcake? He could get mad at a cupcake. His point recently was that this inflation obsession is priced in and overdone. What's your sense? You're talking to economists all day, every day, around the world. What's your take on inflation?
Well, my take on inflation is essentially, it comes down to us. I mean, right, you saw the central banks are worried about what we inside our heads are going to start thinking about inflation. They're really hyper-focused on expectations, and they're starting to worry that we're going to assume that inflation is going to take off. Whether it actually will, I'm not sure. And the reason I'm not sure is because the central banks are so freaked out about it. I've been watching central banks for the better part of 20 years now. I never saw such a hard pivot in policy as I did over I was going to say the second half. It really happened over the last couple of months, where they were like, they were sticking with the lower for longer mantra. They wanted to experiment with pushing the unemployment rate down. They wanted to make sure that we had a long runway to bring employment back to where it was before the COVID crisis. And then it just on a dime almost, certainly in terms of central bank thinking, they shifted hard. And they shifted because they're worried about expectations that those are going to get built into the inflation story. So, you know, I think they talk like a group of people who are ready to crush it. So there might not be inflation. We might be getting ahead of ourselves on worrying about inflation, but we might not like the reason that we don't need to worry about it. That seems to me that the central banks are ready to trigger another recession if they have to bring those inflation expectations back.
Now, Amanda, you host a global show, so the inflation story is something that you would engage in not just domestically, but around the world. What's your sense for how that's playing out in other countries?
Well, I think Kevin's really nailed the most important point when it comes to inflation, which is it doesn't happen externally. We make it. It's man-made, human-made, and our expectations are everything. So one of the shifts we have seen, to his point, of central bank willingness to tackle it. I don't know whether we could say trigger a recession, but certainly willingness to tackle it is what I would say. Bruce, the real problem we have is we thought we, central banks, economists, politicians, in a very different place today than we are. We are in another inning of what feels like a very long baseball game. And so do we have the capacity to rein in inflation, or what we need to do is spend more, stimulate more? This was always the concern. The concern was always that this game would go on longer than anyone thought, and we're running out of hot dogs. So this is the problem that we're in. So to me, I would agree. A little inflation is a good thing if it means the economy is growing. It will at some point trigger wage increases. We're starting to see that, although not really in real terms. But we're starting to see traction on price improvement. And in some ways, that's healthy. What's not healthy, of course, is the deflationary pressures we saw ahead before this pandemic. And we may well be heading back to that world because there's so much beyond our control.
JF, take us through your bank's view of the glide path for the Bank of Canada on rates. That is a very tangible prediction. All economists do it. Where are we in 12 months? Is it 5 to 6 hikes? Is it 150 basis points? What do you think?
But certainly, I mean, it's at least 100 basis points, right? We're starting at 25 basis points. They're well behind where inflation is. So kind of real terms, so the real policy rate has been falling precipitously over the last 6 or 7 months, which is of course not something the Bank of Canada is I think we assume is not particularly comfortable with. So when you layer that that starting point of policy being incredibly stimulative at present, with what we perceive to be still a pretty robust inflation environment. So we do think inflation in Canada will be around 4.5% in 2022. This is total inflation, not one of the core measures. And that's because, as Amanda indicated, wages haven't started to rise yet. We think that's going to happen. There's still some question about these supply bottlenecks and how they unwind, if they unwind. So this kind of transitory versus not transitory stuff. So the inflationary pressures in my mind are real. And that requires a significant policy response. But the policy response is really, is pretty tame in light of what inflation is turning out to be. Even if they raise 100 basis points this year, and we end the year at 125, inflation is going to be about 4%. Right? It's still a deeply negative real interest rate, and it's going to take a very, very long time to kind of come back to normal if we ever do get back to normal in terms of policy settings.
Juliette, you care a lot about earnings. You focus a lot about earnings because they inform whether you're a buy or sell on a stock. What is your view on where inflation is hitting the earnings of the companies you follow, and which sectors would you say have been more successful at passing on those increased costs?
Sure. So in terms of the companies that we look at, we definitely have seen inflation start to affect earnings. Q3, we're hearing a lot more about the Delta variant. Q4, we're going to start hearing a lot more about the impact of inflation. And that's hitting everyone everywhere. It's hitting companies with respect to wages, input costs, materials, freight, logistics, everything is being affected right now. The supply chain issues clearly are also getting a lot of attention, where first we saw consumers were buying a lot of goods and factories in Asia were being shut down. We saw containers being locked up in ports. And so that has really affected a lot of companies' confidence in terms of spending and in terms of investing. We do believe that a lot of the supply chain issues are more temporary. It's a bit of a pig in the python type of situation where the backlogs as well as the factory closures are really affecting corporations right now. And the companies that have been better able to pass on or manage some of these pressures are those that have pricing power. It sounds obvious, but there are certain areas within industries across the board that do have unique products or unique delivery methods that are able to pass on some hikes and are able to manage their expenses relatively well. And in our expectation, we think consolidation will also play a role in how corporations manage some of the current pressures to extend some of the current growth rates that we've seen and be able to use a higher revenue base, cut costs, manage some of the labor challenges that we're seeing, in that companies that are complaining or really seeing challenges in finding staff may actually be able to cut less and apply redundancies less across a consolidated base and satisfy some of the labor challenges that way. So we think that there are opportunities across benchmark, and we still are relatively optimistic, but not nearly as much as we would have been last year.
Amanda, I want to weave in house prices here because obviously it's connected to the inflationary pressure. It's great if you've owned the house for decades and you're moving to a teeny tiny town somewhere. You've got huge profit. Hooray for you. It is a con for most other players here, for companies trying to hire young workers who want to, live in the city. It's become ridiculous. Is there no end to the ridiculousness here?
And there should be an end. And all of us will agree that there is a policy solution to our housing crisis, and I'll call it a crisis because it's an affordability issue. It goes to the basic human right of shelter, and we are running into places where that is not happening. That's not available to some Canadians. That's just not okay. I'm not talking about people who, have to wait a few years to save up for their down payment. I'm talking about people who can't afford proper shelter. We could solve this by building more. And this is a problem we've identified some 2 decades ago. Many levels of government, all three, in fact, have promised to fix it and haven't. So the problem here lies somewhere in the incentives, in the profit mechanism of who owns the land and who's developing it and at what pace. That's where you have to focus your attention. The federal government promising to build homes is a joke. That's not where it happens. The solution is at the municipal level. And I think if you dig a little, you'll find there are solutions. What I would say, Bruce, is to your point, it feels good for some, but you have to get off the merry-go-round in order to get the payout. I just want everyone to remember reversion to the mean. Trees don't grow to the sky, as they say. We have to remember that there will be a pullback at some point. It's never not happened, if I can double negative on you. It's true with stocks as well. So just understand your own kind of risk parameters and what you're comfortable with and where you're living financially in that space, because it could be ugly at some point.
Matt, the political dynamic here, whether it's a joke or simply political theater, there's been lots of activity. There's lots of task forces and national strategies and roundtables. Oh my. What is your look ahead in 2022 as to whether or not things will actually happen at, as Amanda says, at the municipal level, provincially, federally, to start to crack this in a meaningful way?
Specifically housing, Bruce?
Specifically housing.
It won't be at the municipal level. The incentives are wrong. The most progressive councillors I know in Toronto, and I live quite deep in the heart of Toronto, they are pretty adamantly opposed to development. I watch my very good NDP voting neighbors, viciously resist a mid-rise affordable housing development within a mile of their house because they worry about the character of the neighborhood. This is not going to be fixed at the municipal level. The federal government can probably stop making things worse by trying to just pump more money into first-time buyers and whatnot. I think what's going to happen is that the provinces are going to just have to start swinging their literal constitutional and regulatory weight around and upzone entire swaths of their territory, where they're going to say, hey, guess what, cities? You're creatures of the provinces, constitutionally speaking, and all those restrictive building regulations you have, they're gone. Anyone can now build a triplex on a property that's now zoned for a single detached home, or any designated avenue is now approved by right for mid-rise development. They're not going to want to do this. There's going to be a lot of reasons not for them to do this politically. Like I said, the incentives are wrong. But as I said before, this is going to start changing from an economic issue to a societal issue. And I think there is growing recognition about this. I think we're in the stage of this crisis, as Amanda has said, where we all know it's a crisis. No one has quite worked up the nerve to do anything about it yet. Right now, we're distracted. And like I said, we're exhausted. We're still dealing with this damned virus. But when this virus is over, we're going to have a little bit of time when the dust will settle. We'll figure out how much of the work from home revolution is permanent and how much of it was temporary. There will be some shifts in demographics and where people choose to live because of that. But when that's over, if you look at a chart, and there are some very smart people doing this work, in the last 20 years, construction of new housing units has decoupled from population growth, whether by natural population growth or by immigration. It used to move roughly in lockstep. The housing stock generally used to grow in line with the population. In this country, for the last 15, 20 years, it is not. This is basic economics. There's not enough supply for a reason. We can fix that. It's going to be unpleasant.
Now, Kevin, I want to make the segue here from housing in particular to debt. And for homeowners looking to buy a home, they're taking on massive levels of debt, but there is also a massive level of government debt because of the stimulus that the government put into the marketplace for lots of very valid reasons. You wrote recently that you're now getting worried about debt. Give us your case and what predictions you have for 2022 on that front.
Sure. Just to clarify that just a little bit, it's not so much that I'm worried about entirely government debt, but just worried about overall indebtedness. I got an email earlier this year from a reader that's really stuck with me. He sort of sardonically compared Canada to Argentina. And I can't get that email out of my mind. Of course, Argentina, long history of debt crises there. And think about it. Think about the comparison. That's a wealthy country that generated much of its wealth on resource extraction. Didn't do enough along the way to find ways to generate wealth from something other than its God-given resources, and then started to pile on debt to maintain that quality of living to which it had become accustomed, and then it collapsed. Now, am I predicting that that's going to happen in Canada? I'm not, but the issue is now that we've saddled ourselves with so much debt that it just has to become an issue at some point, whether that's a financial crisis of our own making or simply a drag on growth going forward, given that we're going to be spending so much of our disposable income on paying off the debt that we've been piling up especially over the last decade. I mean, of course, this has been happening for longer than that, but this is really sort of a phenomenon of the rescue that followed the financial crisis. And policy just hasn't caught up and to keep pace with that debt accumulation and put sort of restrictions in place to unfortunately to force us to pull back on the throttle. So it's become a real anchor, and at best probably it remains an anchor, but there is certainly a significant risk that it becomes something much worse than that.
We're going to include your questions in the conversation as it unfolds. So if you have a question, please go to that little box and type it in. I've got some that I'm going to get to in just a moment's time. But before we segue from this broad look at the economy to the stock market, JF, I want to just turn it to you to ensure that we have highlighted the biggest thing, the biggest theme, the biggest risk factor, the biggest prediction that you would have in terms of economic performance in 2022? Would it be something we haven't talked about, like the labor shortage, or would it be punctuating something that we already have talked about?
Well, I think there are two things. In terms of, again, setting aside the virus, because that's basically, I mean, not quite unpredictable, but it's kind of not in the economic realm in terms of dynamics, but clearly a risk to the recovery, and which we think is going to be pretty strong. So very strong growth this year, probably next year. In fact, not quite as strong as the Bank of Canada thinks, which is really, really strong, but very strong. It's it's the availability of labor, right? We're still in the reasonably early stages of a recovery. We're looking at 1 million job vacancies right now. The participation rate, so the number of workers that are working or looking for work, is basically back to where it was pre-pandemic. At some point in time, if firms can't hire the workers that they need, they're going, expansion is going to be very difficult. So I think that's one of the things that is very, very important to the outlook. It has a number of potential implications. And the other, and we've talked about this a little bit already, is housing. To the extent to which, for instance, you can think of one of the ways in which we can solve our labor challenges, which is what we've been doing in the last number of years, is to bring labor into the country, right? And that's easier to do when house prices aren't nearly as high as they are now. So if our business model relies on these immigrants, and I mean, our business model does rely on immigrants, at some point, there's this tension between we bring more people into the country, you got to build more homes to keep them, to house them without creating these additionally crazy high prices. At some point, there's going to be this interaction between, we're taking in too many workers, it's leading to this house price issue, or the house prices become so high that workers are discouraged. Like, well, I'm not going to Canada, I'm going to go somewhere else because I can't afford to live in any of the cities that I want to live in. So the interaction between those two, so the job vacancy issue, immigration, housing, I think is something that we're going to, will have pretty significant influence over us next couple of years, and probably well beyond that as well.
The economic outlook, of course, is the context for any conversation about the stock market. Amanda, I want to lead with you here. In terms of where the people, the analysts, the portfolio managers that you talk to, where they predict stocks will be 12 months from now, higher, lower, around the same?
There is a general sense of bullishness. You do get people who are worried about valuation. They'll admit it. But of course, the participants in the market are the last who will say so, Bruce, as you and I know very well. So they're not actually the people you can ask. They will admit, though, the valuations are stretched. What I will say as sort of the underpinning reason for optimism is we have seen the adaptability of business alive and well. And it goes a little bit to what JF was just saying, which is labor shortages can be solved in a couple of ways. One, of course, is three ways, actually. You can raise wages, you can import cheap labor, which I hope isn't what we do, or you can do without labor. And we've seen a big push to increase digitization, to increase the efficiency of your operations, AKA get rid of workers and install machines. And that is likely to continue. So it's just to say, what that does is make profit margins expand. And we saw that massively this year. Apple, Amazon, you can say they're expensive, but if you look at their margin expansion, they're not expensive on that basis. So I think we see more of that. And there is reason to fear the lofty levels of the market, Bruce, but also reason to justify it.
Juliette, you referenced rotation a couple of minutes ago. What do you predict investors will rotate into, and what will they rotate out of?
Well, as interest rates start to move higher, there has historically been a rotation away from traditionally long duration assets. So some of the very high growth equities that have really led the recovery, and those would be in the information technology sector, some of the names that we wouldn't even have heard of maybe a year and a half ago that really garnered a lot of attention, are likely to be the ones that investors start to critically look at their ability to be profitable as interest rates start to move up. And so as we look at the market, we're really, we're obviously very, very excited about some of the disruptive technologies that we've seen and are going to be relying on. Amanda referenced some of the automation, or even some of the AI or online gaming that we've seen more and more of, autonomous driving. So some of those companies are currently benefiting from a lot of investor interest, but a lot of them are not profitable. That said, you really do need a very robust internet connection, and increasingly those companies are relying on 5G networks. And the companies that are really the best positioned for that right now are the communication services companies. The traditional telecom companies are companies that you can actually look at that are profitable. They're growing their cash flows, even with increased capital expenses, and they're paying dividends to their shareholders. Another example could be the utilities group, where you can't mine your cryptocurrency if you don't have a solid power grid that you can rely on. And so and in turn, a lot of those utilities rely on fossil fuels. So there are a lot of segments that are overlooked right now. Yes, they have moved a little bit higher in the recovery, but not nearly to the extent of some of those high growth companies that are still very, very popular, are going to change the way we live, but do rely on a lot of old technology type of products and resources that we have all come to rely on as well.
Amanda, I want to weave in a theme here that we've talked about in past, some outlook events. We talk about it a lot, and that is climate change. There has been no shortage of news events in the last 12 months that point to concerns about climate. What's your prediction for 2022 on where that is going to be on the agenda for publicly traded companies?
I think it's going to be front and center. I mean, the thing we've seen really shift, Bruce, in the last few years, but it was accelerated by the pandemic, was a willingness to price in that risk. And the minute you are pricing it in, you are actually taking it seriously. And so we're seeing what's been interesting to me on this file, Bruce, and I've said it before, is corporates are actually leading governments in this. Corporations are kind of insisting on pricing it in and putting it on their balance sheets and trying to find their way without any kind of global pricing mechanism yet. We have individual state mechanisms. Some of them are weaker than others. If at some point we got some kind of global framework, that would be a game changer and some very profitable for some. So right now we're letting the BlackRocks of the world decide our future on climate change. I don't know why, but that seems to be what we're doing. The policy should come from governments. I was hopeful for COP26. Nothing really happened there of any kind of great import. So here's looking to COP27, I guess.
Right. Well, Matt, let's now weave in I'm using weave too many times. Let's bring in the Canadian political conversation. I think there was a federal election in 2021. It was a bit of a bore. What are you watching for politically on climate change in particular?
You know, it's funny. Amanda just said a moment ago, she doesn't know why we're letting the corporate world lead on this and not governments. I know why. Because the corporate world has been watching the governments try to wrap their minds around this pandemic for the last 2 years, and we haven't exactly draped ourselves in glory here. I mean, I think any independent observer who's been watching how Canadian governments have responded to this probably still has the risk to Canada's low ringing in their ears as we pass the 30,000 dead Canadian mark recently. The Canadian government has shown, it's a very bland, benign euphemism we use, that it has state capacity issues. We struggle to get stuff done. There are exceptions to this. We did have a better than expected vaccine procurement and distribution. The federal government's personal and business support payments were generally well received, but we have not exactly manifested enormous reserves of capacity. Look what happened recently in British Columbia with those storms, which completely caught the local leadership in British Columbia off guard. With the possible exception of some of the Atlantic provinces, none of the Canadian sub-federal jurisdictions have handled COVID well. I think people are looking to the corporate world to fill in the gaps here because the Canadian governments at any level seem very baffled about how rapidly the world is changing around them. In terms of the actual political dynamics of climate, we will continue to see some work on this. And it's just a really easy explanation why, to get a majority of votes, it's very easy for the Liberals to turn to the NDP and say, get us over the top to pass some legislation. And the environment is a natural place for them to be working. The Prime Minister himself obviously clearly values the climate file as part of his own legacy and something he's personally passionate about. So I won't be shocked if we continue to see progress on this one, but I would also not be shocked if we continue to see this be something that is largely determined by the corporate sector, because the Prime Minister and the Liberals more generally here, they are very mindful of the fact that Canadian energy sector continues to contribute considerably to the economy, but more so to the point that concerns about national unity issues and tensions over the Canadian energy sector are something they're politically worried about here. So it will be an interesting balance for the Liberals to try to push forward on some of their environmental aims in a way that satisfies the NDP enough to keep those votes coming in without completely outraging Western Canada. It's going to be a tough balance. I don't know if they'll stick the landing.
Kevin, you wrote recently that political risk is a big theme you're watching for 2022, that there are big things to be done, but that the political class might not be up for it. What do you mean by that?
What I mean is this. I had two takeaways from the election, Bruce, actually. So there was a bit of a meme after the election. There was basically an election about nothing, and I get that critique. But it wasn't an election about nothing. You saw some consensus around some big policy issues come together, both through sort of the voting, the overall voting patterns, and the platforms that the various parties put in place back at a moment when they thought they were trying to reach as broad an audience as possible. And so you saw some consensus come around climate policy. You saw consensus come around, I'll call it big government, but there's not going to be any great rush back to austerity. That's sort of baked in, and people voted for that. And you could go down the list. But I'm not sure how the political class itself is going to come away from the messages, from that broader message from the election. And what I mean by that is that there now seems to be a push to try to go for vote efficiency rather than enlarging the vote base. When I think everybody on this panel was growing up, we were looking at big tent parties that tried to grow their voting base. That was the push between elections. Now it's about the efficiency of the vote. So you've seen twice in a row, the Liberals have managed to pull off a minority government with less than, with a smaller amount of the popular vote than the Conservatives. So both parties now seem to be fighting around trying to get the most out of that 33% of the voting public that they can sort of rely on from election to election. That's not going to create the incentive to do big things going forward. That's the incentive to do little things. That's small beer politics. That's where you're proceeding very cautiously to make sure, one, that you don't do anything that alienates your own base, and at the same time making sure that you alienate the other side of the political spectrum at the same time to keep your own base engaged. And that's not how you're going to come to any sort of consensus that's going to allow you to push forward on subjects like climate change, on subjects like what to do with the deficits, whether to pull them back, whether to reallocate spending toward more productivity, that sort of thing. So I'm really worried actually about the state of politics in Canada and whether they're up for the current sort of set of politicians are up for the task of doing some of the things that I feel that we need to do over the next few years.
Matt, I can see you're nodding here. I want to get your 2 cents, but I also want to weave in or include a question from the floor, which is around Aaron O'Toole and whether he will be the leader of the Conservative Party in 12 months. So what's with the nods, and is Aaron O'Toole around 12 months from now?
Okay, I'm going to answer that in 3 quick points. To the question from the floor, yes, Aaron O'Toole, barring a completely surprising scandal, will be around in 12 months. The reason for that is because he has successfully put down the attempted coup against him. We saw some of that. He did put it down. I was skeptical that he could, but he seems to have. And I think as we move into the new year, he'll have a chance to kind of get a bit more settled in the job. So I do think Aaron O'Toole will be around a year from now. I'm nodding to what Kevin is saying for 2 reasons. First of all, I think he and I are completely in lockstep and having real concerns about the ability of Canadian governments, again, at multiple levels, to deal with this, with all the various challenges we're finding. We have seen, even before COVID came along, when Donald Trump was elected president of the United States, that basically zeroed out the federal government's capacity for sort of crisis management. And this is something that was remarked upon and written about at the time. Managing the Canada-US relationship absorbed all the sort of bandwidth that the federal government had, particularly around the Prime Minister's office. We didn't really have the capacity to deal with anything else. Crises are coming at us faster and faster now. We have the same general group of people, and now they're more tired. So I don't think we're even as capable as we were a year or 2 ago of dealing with this stuff. The other thing that I was nodding at for Kevin, though, is there is a possibility of political instability in Canada. And I don't mean that in the sense of a destabilized democracy, but when Kevin was talking about vote efficiency, this is just basic math. I talked to a Conservative friend of mine after the last election, and he said, there were dozens and dozens of ridings in this country where we lost to the Liberals by less than 2%. And he says, the reason that matters, if it's a vote efficiency contest, is if there is a 1% swing in the vote during a campaign, maybe the Conservative leader has a good debate performance, or there's a policy the Liberals announce that backfires, or there's a gaffe or a scandal, a 1% swing in a riding where it's a 2% vote margin, if that 1% goes from Liberals to Conservatives, with only a tiny movement in the national polls, we could see 30 or 40 seats flip Liberal to Conservative here. We're going to be in an era now where our polling margins are not going to be able to realistically forecast for us what the outcomes of our elections might be, because a 1% swing could move 20, 30, or 40 seats. It's going to be really interesting to see this happen. But to Kevin's point, this is going to make the parties ever more focused on preserving their vote efficiency, probably at the expense of actually building sustainable national coalitions.
Amanda, I'm going to ask you a question on the U.S. in a second, but before we do that, I just want to foreshadow that we're soon going to move into the last word from our panelists, which, as you may recall from future years, it is each of our panelists' opportunity to lob out one final prediction for 2022 or a final thought that we just didn't happen to get to. or it could be a hope for the year to come. Before we do that last word, though, Amanda, I want to include the United States in this situation. 2022 could be a big year there. I don't know. What is the number one thing you would say you're watching outside of who is going to take over the anchoring spots on the big networks? Fox, MSNBC, and CNN all have some big changes with their on-air personalities. That aside, what is material to the US political story that we'll be following?
I actually think it's of the utmost importance what happens at the midterms. I think that President Biden has been grossly underestimated or congratulated for his accomplishments, but it doesn't really matter what he's done. The months ahead are going to be critical. Climate change, one big issue. Ukraine is another looming global problem that makes China look tame at the moment. And I think we are all at our peril if we ignore that as a big problem. You need a strong US president. We need one with the support of Congress. So to me, what happens in November matters. I think that the writing's on the wall, but how will President Biden manage that and what will that mean for the rest of the world, I think is going to be the thing I watch the most closely.
Juliette, you are someone who is engaged with the world. You follow stocks very closely, but I know you follow so many other things. How do you weave in these political conversations and the ebbs and flows, or do you consume that material for entertainment purposes alone? How is it possible for you to weave it into the predictions that you make in the work that you do?
Well, you hit on it almost at the very beginning of the session where you talked about us being a bottom-up investor. And so we really do try to exclude a lot of what we could call noise and really focus on a company's actual ability to be profitable and control what they can control. I mean, naturally, there are going to be a number of factors. We hit on a lot of them today that companies aren't going to be able to manage, but how effective is management? How focused are they on their strategy? Even some of the discussion about climate and some of the way that companies have been focused on their targets, achieving targets, setting ever higher targets is something that institutional investors are really focused on, and they're doing a lot better than governments, and we know that, we've seen that, and we expect that will continue to happen. But maybe if I can just say quickly about what I think is going to happen in 2022. In our thought, we're going to see a situation where the monetary policy is still accommodative, but less so than we saw over the past couple of years, because stimulus is going to still be there, but again, less so as they start to retrace some of the stimulus that they put into the economy, as well as corporate earnings will also be slightly less than we saw in 2021. And capital markets, well, equities in particular, less robust than we saw in 2020 and 2021, which were both incredible years for the equity market. And lastly, just in terms of what we think will happen in terms of a hope, I would say, North America, developed countries have been exceptionally privileged in terms of vaccines. I would love to see the developed countries start to get a little bit more, because that will really help the world progress and get back to a bit more normal environment.
Juliette's last word, JF. Next to you, a final thought, a prediction, a hope for 2022, or all three, as long as you can do it in the time allotted.
So, I do think we're in for a very strong year. There's no question about that. All signs point to, strong growth and strong wage growth and strong employment growth and all the very good things. But I do think, though, that as a country, coming back to a point that Kevin made and Amanda made a little bit earlier, that, what is likely to happen in Canada this year is that we will underperform on the investment side once again. That even if investment does pick up, it's not going to pick up as much as picking up in other countries around the world. So our relative competitiveness is likely to suffer. And that, to me, is a hope. It's an opportunity. It's a critique. It's whatever you want. But I just don't see governments focused enough on finding ways to raise private investment in a meaningful and sustainable way, because at the end of the day, that is the solution to many, many, many of the economic, financial, and fiscal and political challenges that we have as a country.
Kevin, to you next. What is your last word as we begin this year?
So I'll go with the hope, and it'll be a weak one, given my and Matt's conversation or our dialogue a bit earlier. But I hope the political class will prove me wrong and actually rise to the occasion. And that means doing more than just fighting the pandemic. I mean, I think we can all agree that they've probably done the best they can, but we need to do more than just get vaccines into arms and keep the pressure off the health system. We, as JF just said, we really need to reorient this country's investing patterns toward things that are going to make the country more competitive and not things that make it less competitive. And that means, you know, getting money out of real estate and putting it into tech or whatever that might be. It'd be great to think that the private sector will take care of that on its own. It won't. It's going to need some sort of a steer from policy. That's just the way this country has always worked. That means that's, as I said, the politicians need to rise to the occasion. Not particularly hopeful that they will, but I do hope that I'm wrong.
Matt, are you a little bit optimistic? What is your last word?
You know, it's funny. I'm naturally a cheerful enough, optimistic guy in my own circumstances. My life is wonderful. Things tend to go well. I'm very happy. I'm very blessed. I am really worried about some of the macro issues, though. And to Kevin's point there, I'm with him. I hope the politicians surprise me, us, I guess. I hope they overperform our expectations. But to Kevin's comments, I'll add one further hope. I hope the world gives us the time to learn those lessons and to make some of these changes. As I said before, the crises are coming at us very, very quickly here. They're moving faster than we are capable of. When action is required in days, the Canadian government takes weeks or months. There's one little issue I absolutely love, just as a microcosm of our dysfunction. The Canadian Army has been trying to replace its pistols for the last 11 years, and it hasn't been able to do it yet. In fact, just a few days ago, it had to reboot the competition to get the bids. We're not good at reacting in real time for stuff. It doesn't get much easier than an army buying pistols, and yet that is beyond Canadian government capacity. Look at the problems we face domestically. As Amanda said, look at Ukraine. Bruce, you've mentioned it. Look at what's happening in the United States and the possible problems there. And then remind yourself that you live in a country that cannot buy a gun for the army. I really hope we overperform, but I am worried.
Amanda, what is your last word?
You may remember, it came back to me yesterday, Bruce, that Matt and I agreed this time last year that variants of concern were high on our list of things to watch in 2021. I hate having been right about that. My hope, honestly, at this moment, is that we stop talking pandemic and start living endemic. And that's the word that people are beginning to use. We're not there yet, Lord knows. But the hope is that we move into a phase of this where we actually adapt. You remember in the beginning of this, we got it wrong. Rental car companies downsized their fleets and you still can't rent a car. We now know what it looks like to be in this situation, and we could stop pretending it's going to end in 2 weeks or 2 months or a year and live with it. And my hope, therefore, is a political one, a social one, that we adjust and stay adjusted. But there's not another side to this necessarily. This might be what it is, but there's an upside to that. The glass half full argument of that is we actually start making good long-term decisions based on the world we're living in right now.
It is a never-ending baseball game, Amanda, with an infinite number of innings, and clearly we need lots and lots more hot dogs and maybe beer too. Maybe beer too. To Amanda Lang, anchor BNN Bloomberg, Juliette John, portfolio manager Iris Asset Management, Jean-François Perrault, chief economist at Scotiabank, and Kevin Carmichael, the editor-in-chief of the Financial Post, plus Matt Gurney, columnist with the National Post. Thank you for your insight, for your energy, for your passion. It was really a pretty extraordinary conversation. I also want to thank the National Post, our partner, and its representative, Marianne Lavallee, for this real history and heritage we have of bringing things together to create this event, and to our sponsors who support it both financially and through our marketing efforts. This year, those sponsors, the Canadian Bankers Association, EY, and Scotiabank. Thank you. Thank you to our AV supplier, Van Valkenburg Communications, and LiveMeeting.ca for making this all possible. And when you get that email with the post-event survey, please include your prediction to the question for 2022. Maybe you'll win a Tesla. I don't think the prize is quite that amazing, but maybe you will. I don't know. 2 events for you to be aware of for 2022. Monday, January 17th, we're going to host an all-star CEO panel. We're going to be talking about Canada's clean growth opportunity. It is Don Lindsay of Tech, Dave Mackay of RBC, Susanna Pierce from Shell, and Karn Manos from Terramera. So many upcoming events that you can find out more about at canadianclub.org. You can also sign up for a newsletter such that those events just come to you automatically. Well, look at that. We're finishing exactly on time. Most of all, thanks to you for spending part of your pandemic day with us. We appreciate your time, your energy, your support of the Canadian Club of Toronto, and we look forward to meeting again virtually, in person, however all of this unfolds. Thank you, and have a great rest of your day.